Hey y'all, Zach McDonald with Real Property Associates here, and this is my first ever monthly market update. A few months back, I did my first quarterly market update, and from now on, I'm going to continue these monthly updates indefinitely. So please bear with me as I enter into this first market update. So let's jump right in. June, it's the month of June in Seattle, so this is going to be numbers from May. Last month, in the month of May, Seattle set record prices again for the median sales price, just under 630. Sales prices again, 14.5% up from last year, and 106% again on the price over asking. So we're continuing to see an increase in prices. 75% of homes sold over the asking price in the city of Seattle. And essentially, if your home's priced well and priced accurately, your house is going to sell quickly, and it's going to sell for more than the asking price if you're in Seattle. And this has continued all the way down into the suburbs. Suburbs like Edmonds, $521,000, Shoreline, $505,000, Lake Forest Park, $571,000, and Linwood, $420,000. All of these are either the record highs or very close to the record highs. And in Seattle overall, like I said, 14.5% on the over the median value last June, and the suburbs are seeing the same exact thing. So I mentioned this a few weeks ago, and I want to continue to push this. Seattle is going to become like San Francisco. And I read two articles in the last month talking about the prices in Seattle and how they correlate to what's going on in San Francisco. And what's interesting is even San Francisco, one of the San Francisco papers, the San Francisco Gate, wrote an article about how Seattle is poised to become like San Francisco as their tech talent continues to leave. So they're talking about it, so is Seattle. I just want you all to be aware. I really think that over time, Seattle is going to look a lot like San Francisco. So for you, if you're thinking about buying a house and you're seeing the prices continue to go up, you think, maybe we're in a bubble. It's not like it was last time. Interest rates are low, yes, but people can actually afford to buy those homes that they're buying. So look for the prices to continue to go up. So maybe they are the highest they've ever been, and that might make you a little nervous as a home buyer, but it's still a good time to buy. For you as a seller, if you've been thinking about cashing out, if you bought in 2007, 2008, and the prices were extremely high, they're higher now. So if you're trying to cash out, this would be a good time to sell. If you've had a house for 40 years and you're thinking about downsizing or buying a condo and getting out of that large house of yours, this would also be a great time to sell. So the message is, again, it's a great time to sell and it's a great time to buy. And the interest rates have dropped even a little bit more than they were. And that's mainly because there was a job growth report that came out last week. People keep talking about how the job growth has been awesome in the US, but actually the report came back in negative, and it was the worst report since 2010, which immediately dropped and tanked the interest rate. So if you were looking to buy last week, you got an interest rate of around 3% for a 30-year mortgage. That's crazy. One of my lenders mentioned this in a Facebook post, and I want to give a shout out to Dan Keller and his team. They're awesome. Anyways, if you're thinking about selling and you want to figure out what your house is worth, happy to have a conversation with you. If you're looking to buy and trying to figure out what that process looks like, I'm happy to grab a coffee or a beer as well, sit down, talk about the process, and help set you up for success. Anyways, I hope you find this valuable, and until next week, bye for now.